Let's get right to the floor show. With $10 billion in assets under management, Horizon Head of Research and Quantitative Strategies, Mike Dickson, says you got to stay exposed, but only to certain segments of the market. Mike, let's stick for a moment with the Zions and Western Alliance headlines. A bit worrisome, especially in the wake of J.P. Morgan CEO Jamie Dimon warning just 2 days ago that there might be credit quality cockroaches lurking in the system. Do you see any danger of contagion here? Because pretty much the entire sector is selling off.
Well, look, I think that these kind of bouts of volatility are actually quite healthy for the market, just given the strong run that we've had. I think early reports at least show that some of these defaults are, certainly isolated. But I think it's healthy when you have this reminder, especially after some of the really strong back-to-back gains that we've had this year and just where valuations are. So, overall, we'll get more reports as the days go on. But for now, it does appear to be isolated.
When you say it's essential to stay exposed, but only to certain parts of the market, which parts are you talking about?
Well, look, as we sit here today, and you asked me where are we going to be at the end of the year, I do believe we're going to be higher. And when we think about what's been driving the market, the way that happens is, the AI trade that's been fueling the market so far this year. But, it's not just a broad Mag 7 type of exposure. There's certainly laggards amongst that group, and they're beneficiaries. And so, looking, under the hood at some of those beneficiaries, you've got some of those top AI leaders like Microsoft and Google and Meta, the Broadcoms and Oracles, those have been doing quite well. And I think in the absence of a lot of the smaller software names really being able to differentiate their products, I think the market is going to default to a lot of the top of the market to continue to carry that torch. So I think really at the core of the portfolio, being selective at the top of the market is a great way to be heading into the rest of the year.
Okay, and some of those names are cheaper today, certainly with this broader market sell-off. I'm interested to know why you're not picking, say, for example, a Taiwan Semi. Looking at Taiwan Semiconductor, that has a good news today and earlier hit a record, I think, of more than $300 per share. And we've got the story basically being that Taiwan Semi is going to say that the global foundry area, that's where they actually manufacture this, raised its forecast for 2025 growth to the mid-30% range. I mean, every road has to go through Taiwan Semi if they want their chips manufactured, right?
It does, and that is certainly an early look at what the rest of the earnings season may hold for us as it relates to this AI trade. But I also think the market is coming to the realization, or at least needs to, that without power, we're not going to put a lot of this capex spend to its greatest use. And so when we look at a lot of the estimates for the power demand for a lot of this, AI spend and data centers, there's really enormous estimates that far exceed what we currently have available, here in the U.S. and globally. And so I think, also not just the top of the market, looking at more on the value side, where you're looking at some industrials involved in, electrical equipment and the engineering involved in getting these power grids up and running on the utility side and energy sector as well. I think those are some AI adjacent sectors, more on the value side, not necessarily the growth side, that are really poised to be the handoff. And actually, I think all roads will kind of lead through the power, because without that, we're not going to be able to put a lot of this capex spending to its optimal use.
Mike, what if an investor is watching right now and thinks, I might be a little too U.S. equity heavy in my portfolio? And this term diversify, it's kind of overused, but you talk about where to kind of shake up a portfolio a little bit. If it's got too many U.S. mega cap stocks in it, where do you go internationally?
Well, sure. I think diversification in the international block as a whole, for one, you get a sector composition that is quite a bit different than what you get here in the tech-heavy U.S. So just the international block as a whole, you're going to get a lot more exposure to these, industrial, energy, and material names. Some of the emerging market energy exporters. And if we, do believe, like I do, that the power and the delivery of this is going to be really the next phase of making the most out of this capex spend, that's going to be a great way, that international block as a whole, to get exposure to those sectors and industries that are necessary for that build out.
Mike, we're watching a lot of action in the markets. Thank you for bringing it all together with us, including the regional issue, what's going on with AI, and so much more. We thank you so much.